Right now, if you are a Canadian senior or you are getting close to retirement, there is one question that deserves your full attention. Is your government pension income actually going to be enough to protect your standard of living in 2026? Because here is the truth that most people never talk about. Millions of Canadians collect CPP and OAS every single month without fully understanding how their payment was calculated, whether they are receiving the correct amount, or whether they are unknowingly leaving hundreds, sometimes thousands, of dollars uncollected every year. That is not a small problem. That is real money that belongs in your pocket. Today, we are fixing that. This is your complete verified update on CPP and OAS for May 2026. We are covering the exact payment date, the official dollar amounts confirmed by the Government of Canada, who qualifies, how your personal amount is determined, what could be quietly reducing what you receive, and a clear action plan you can follow starting today. Welcome to Canada Pension Map, your trusted guide to understanding every dollar of your Canadian retirement income. Before we get into the details, let me give you a quick summary of everything this video covers so you know exactly what you are going to walk away with. We are confirming the official May 2026 payment date for both CPP and OAS. We are going through the verified maximum and average payment amounts straight from Service Canada. We are explaining who qualifies, how your personal amount is calculated, and what is silently reducing your pension right now. And then, at the end, we are handing you a 6-step action plan, what we call the MAP, so you leave this video knowing precisely what to do. Every number in this video comes directly from official Government of Canada sources for the April to June 2026 quarter. No estimates, no speculation. Let us start with the Canada Pension Plan, which most Canadians simply call CPP. Your CPP payment for May 2026 will be deposited into your bank account on Wednesday, May 27th, 2026. If you receive checks by mail rather than direct deposit, allow 2 to 3 business days beyond that date for delivery. Now, what is the actual amount? The maximum monthly CPP retirement pension at age 65 in 2026 is $1,507.65 per month. The average monthly CPP retirement pension received by new beneficiaries is approximately $803.76 per month. That gap between the maximum and the average is not a coincidence, and it is not random. It exists because your CPP is not a fixed government handout. It is a direct reflection of your personal work history and your contributions over your lifetime. Your CPP benefit is calculated based on 3 things: how much you earned throughout your working years, how much you contributed to CPP during those years, and how many years you contributed during what is called your contributory period. Your contributory period runs from your 18th birthday to the month you choose to begin receiving your CPP pension. During those years, the government records your pensionable earnings, adjusts them for inflation, removes your lowest earning years from the calculation, which is a protection built into the system for you, and then calculates your average. The higher and more consistent your earnings over your career, the closer your benefit will be to the maximum. If you worked part-time, spent years away from the workforce raising children, or went through stretches of reduced income, your CPP will reflect that history. That is not a flaw in the system. That is precisely how it was designed to work. The key is to understand your number so you can plan around it with full information. Here is something that stops a lot of Canadians cold when they hear it for the first time. The single most consequential retirement decision many Canadians make, choosing when to begin collecting CPP, is often made without doing any math at all. And getting it wrong could mean losing more than $100,000 in lifetime income. Stay with us because we are going through this completely. You can begin collecting CPP as early as age 60 or as late as age 70. The difference in outcomes between those two choices is dramatic. If you begin CPP before age 65, your monthly benefit is permanently reduced by 0.6% for every month before your 65th birthday. That works out to a 7.2% reduction per year. If you take CPP at age 60, the earliest date allowed, your benefit is cut by 36% permanently for the rest of your life. On the other side, if you delay past age 65, your benefit grows by 0.7% for every month you wait. That is 8.4% per year. If you defer all the way to age 70, the latest allowed, your monthly CPP is 42% higher than it would have been at 65, and that increase is permanent for as long as you live. To make that real, if your standard CPP at 65 would be $900 per month, delaying to age 70 could bring that to approximately $1,278 per month. Over a 20-year retirement, the difference in total income between those two numbers is substantial. When does it make sense to take CPP early? If your health is poor, if you genuinely need the income right now and have no other financial cushion, or if your personal circumstances require it. Taking CPP early in those situations is a completely valid decision. But if you are in good health and have savings or other income sources that can carry you through your 60s, delaying CPP is often one of the most financially rewarding moves available to any Canadian retiree. The Government of Canada offers a free Canadian retirement income calculator at canada.ca. Use it to model your own numbers at different start ages before you make this decision. Now let us cover Old Age Security, which most people call OAS. OAS is fundamentally different from CPP. You do not need to have worked or made any contributions to receive it. It is a government-funded benefit based on your age and how long you have lived in Canada after turning 18. The May 2026 OAS payment date is also May 27, 2026, the same day as CPP. Here are the official maximum OAS amounts confirmed by the Government of Canada for the April to June 2026 quarter. For seniors aged 65 to 74, the maximum OAS pension is $743.05 per month. For seniors age 75 and older, the maximum OAS pension is $817.36 per month. That higher amount for seniors age 75 and over reflects a permanent 10% enhancement that the Government of Canada introduced in July 2022, specifically to recognize the increased financial pressures that come with advanced age. This enhancement is automatic. If you are already receiving OAS and you have turned 75, this increase should have been applied to your payment in the month following your 75th birthday. If that increase is not reflected in your current payment, contact Service Canada at 1-800-277-9914 as soon as possible. OAS is adjusted quarterly in January, April, July, and October based on changes in the Consumer Price Index, which measures the cost of living in Canada. One of the most important protections built into OAS is that your payment will never decrease, even if the cost of living falls. The May 2026 payment reflects a 0.1% increase applied for the April to June quarter, which represents a 2.1% increase compared to 1 year ago. To receive the full OAS pension, you must have lived in Canada for at least 40 years after turning 18. If you have fewer than 40 years of Canadian residency since age 18, you receive a partial pension calculated as 1/40th of the full amount for each year you lived in Canada. You need a minimum of 10 years of Canadian residency after turning 18 to qualify for any OAS at all. Here is a number that genuinely surprises most people. Hundreds of thousands of eligible Canadian seniors are not receiving the Guaranteed Income Supplement, a benefit that can add over $100 per month to their income. Are you one of them? Keep watching. The Guaranteed Income Supplement, the GIS, is a tax-free monthly benefit paid on top of OAS for seniors with low income. It is one of the most important and most underclaimed benefits in the entire Canadian retirement system. And if you or someone you love qualifies, this information could change their financial situation significantly. For the April to June 2026 quarter, the maximum GIS amounts are as follows. Single, widowed, or divorced seniors receiving OAS can receive up to $109.85 per month in GIS on top of their OAS pension. The allowance, which supports a spouse or common law partner of a GIS recipient who is between ages 60 and 64, provides up to $1,413 per month. The allowance for the survivor, designed for Canadians aged 60 to 64 who have lost a spouse, provides up to $1,682.15 per month. To put the combined picture together, a single low-income senior receiving both the full OAS and the maximum GIS could receive over $1,850 per month from these two programs combined. That is meaningful income, and it belongs to seniors who qualify. GIS eligibility is based on your income from the previous tax year. For a single senior, if your annual income from all sources other than OAS is below approximately $22,000, you likely qualify for at least a partial GIS benefit. The income threshold for couples is different and higher, depending on whether both partners receive OAS. There is a critical timing point here that many seniors miss. GIS is recalculated every July based on your previous year's tax return. If you have not filed your 2025 income tax return, your GIS payments could be suspended starting in July 2026 until Service Canada receives your income information. Filing your taxes on time is not just a legal obligation, it is directly connected to your monthly income. If you have not yet filed your 2025 return, do so before this matters. If you have never applied for GIS, or if you are unsure whether you qualify, log in to your My Service Canada account at canada.ca or call 1-800-277-9914. Do not assume you have been automatically enrolled. Many seniors are, but a significant number are not, and the missed payments do not always come back. Now we need to talk about something that takes many Canadians completely by surprise at tax time: the OAS recovery tax, which most people know as the clawback. Here is how it works. If your net world income exceeds a specific threshold in a given year, you are required to repay a portion, or in some cases all, of your OAS pension. The repayment rate is 15 cents for every dollar of income above that threshold. For the July 2025 to June 2026 recovery period, the clawback threshold is $90,997 based on your 2024 net income. For the July 2026 to June 2027 period, which will be based on your 2025 income, the threshold rises to $93,450. OAS is fully eliminated when income reaches $152,062 for seniors aged 65 to 74, or $157,923 for seniors aged 75 and over, for the upcoming period. Net world income includes everything: CPP, employment income, RRSP withdrawals, RRIF withdrawals, rental income, investment income, foreign pensions, and any other taxable earnings from anywhere in the world. The clawback is calculated when you file your annual tax return, and if you owe a repayment, it is collected through withholding on your OAS payments in the following year. The most important thing to understand about the clawback is the planning window. If your total income is approaching or above the threshold and you have some flexibility in how or when you draw down RRSP or RRIF funds, making those decisions earlier in the year, before the income is already locked in, gives you real options. A qualified retirement income specialist can help you structure your withdrawals in a way that minimizes or eliminates the clawback entirely. Once December 31st passes, that window closes. We are now moving to the part of this video that ties everything together: the map. This is your clear step-by-step action plan for May 2026. Do not skip this. Step 1 is to confirm your May 27 payment. Log into your My Service Canada account at canada.ca or call 1-800-277-9914. Verify that your direct deposit banking information is current and accurate. Outdated banking details are one of the most frequent causes of missed or delayed payments. If your payment has not arrived by end of day on May 27th, wait 2 business days before contacting Service Canada. Step 2 is to review your CPP Statement of Contributions. Inside your My Service Canada account, find your CPP Statement of Contributions. This document shows your complete contribution history and your estimated CPP benefit at ages 60, 65, and 70 based on your actual earnings record. This single document is the foundation of every retirement income decision you will make. If you have not looked at it recently, open it today. Step 3 is to check for the 75 Plus enhancement. If you are 75 or older and your OAS payment is below $817.36 per month, contact Service Canada. The 10% age enhancement should have been applied automatically the month following your 75th birthday. If it was not, that is correctable and potentially includes retroactive payments. Step 4 is to assess your GIS eligibility. If your annual income from all sources other than OAS is below approximately $22,000 as a single senior, you may qualify for the GIS. Log in to My Service Canada account and review your GIS status or call Service Canada directly. Do not leave this benefit sitting on the table. Step 5 is to run the OAS clawback calculation. If your total net income is approaching $90,997 or higher this year, estimate your clawback exposure now, not when you file your taxes next spring. Knowing your number early gives you time to adjust. A retirement income planner can help you structure your income to stay below the threshold if that is possible in your situation. Step 6 is to model your CPP start date. If you have not yet begun collecting CPP, use the free Canadian Retirement Income Calculator at canada.ca to compare your total lifetime income under different start dates, specifically at 65 versus 70. The numbers will make the decision much clearer. Make this choice with full information, not assumptions. That is your complete CPP and OAS update for May 2026, built entirely on verified official data from the Government of Canada and Service Canada. You have worked for decades and contributed to this system your entire career. Every dollar you are entitled to belongs in your pocket, not sitting unclaimed because of a missed application or a misunderstood rule. The Canadian retirement system is genuinely designed to support you, but it rewards those who understand how it works and take the steps to make it work for them. If this video gave you clarity today, please hit the subscribe button right now so you receive every future CPP and OAS update the moment it is published. This channel exists to keep you informed and ahead of every change that affects your retirement income. And I want to hear from you in the comments below. Are you currently receiving CPP and OAS? Are you still deciding when to begin? Are you worried about the clawback or wondering whether you qualify for GIS? Drop your question or your situation in the comments. I read everyone, and your question could become the subject of our next detailed video. This is Canada Pension Map, and together we make sure every Canadian retires with complete clarity and every dollar they have earned.